Well, Happy New Year. We're looking forward to 2023. Doubt it'll be quite as volatile as 2022. That would be unusual. But actually, looking back, the volatility started in January, and I thought it would last for quite a while, but really not till the end of the year. So let's look what last week told us about the markets, and also where we stand going into 2023. This is the standard sort of summary table for the Viper ETF and Hot Stocks report. The pivots here, these are the tentative new first quarter pivots. As most of you know, I don't really get all the first quarter pivots until we have a trading day in the new quarter, which we haven't had yet. But interesting here that the SPY is above its new quarterly pivot. It was also been holding above the fourth quarter pivot. QQQ, quite the opposite. It's about 6 points below it, not too far. IWM, closer, but still below. DIA, very strong, percentage-wise above that quarterly pivot. And then the NYSE is also above its pivot. We can see that, pretty much all the AD lines except for the Dow are negative. Both the weekly and the daily Dow AD lines are positive. So that's interesting. We're slightly below the 20-day moving average, so it's sort of a neutral reading. We're not 5 to 7% above it or 5 to 7% below it, where usually, it indicates like an overbought or an oversold extreme. So let's look at some charts. Well, I thought heading into the week we might get some resolution after a doji a week ago, but we got another doji this week. So double dojis here, not happened all that often. But clearly you can see that this low from 2 weeks ago, was at 374.77. Last week it was at 376.42. The 20-week 390. If we get a weekly close above that, that probably stabilized the chart. But other than that, the AD line here is just fractionally back below its moving average. Which is literally 60 points. So any kind of number that's the advances are more than 60 over the declines this week will push it back higher. It would need a pretty strong one-sided up week, like for the week on a weekly basis, 23 up and 600 down, or something to push it above this resistance. Daily chart, is back to negative, so obviously a drop below these past lows would be pretty bearish. A strong move above these prior peaks would be encouraging, but still has resistance overhead. Definitely a split market. The Qs still look ugly. AD line here is 3351. Is just barely above this low. Relative performance, still in a solid downtrend. So that's, consistent with it's still weaker than the SPY. So rebounds we see it's going to underperform. And, if there is a decent rally back to like even close to this 283 area in the 20-week, it's probably going to fail. The weekly chart of the DIA, still looks pretty positive. AD line is holding above its moving average. It could, if on a sharply lower close this coming week, it could turn negative. Relative performance, it shows a powerful trend. So even if there is a sharper setback in the Dow, percentage-wise, it's likely to hold up better than the SPY. Really got to get, back above, 2345, and then this spike high a couple weeks ago at 348.22. Those are the levels to watch. The daily is trying to bottom in here, so it's you could give a pretty sharp buy signal early in the week, and if so, then the challenge will be up in that 342. That's the Stark band up there. So on the long side here, the support is pretty well identified. I go back to this low here, which is 324.96, and then down to this one, 324.15. So, it gives you some room. Those levels are just slightly lower than this level, which is 325.71. Looking at our composite of the daily 89s, pretty interesting here that we have the 20-day, the 20-day exponential, the 50-day simple, and the 100 simple all converging here right around 387.42, 50 days at 387.61, and the 20 days at 386.30. So, how do you interpret that? Probably the easiest explanation is be bearish. But, it also raises the thing, if you get a sharp move above that, it might cause some false enthusiasm. AD lines, daily AD lines are all negative, as I noted. We've been trying to get above the EMA here in the S&P, not doing it. There was, a little, a bounce in both the NYSE and the NYSE all, but nothing, very impressive. Surprisingly, there were some signs of strong buying last Thursday. You can see we hit over 88-90% on the S&P and on the Qs on the upside. So that was surprising. Of course, the day before we had a 90% down day in the S&P. The NYSE advanced minus decline oscillator here is pretty much stuck in neutral territory, as it has been for the past couple weeks. You can see about 2 weeks ago it got down here to minus 1,000, and the upside it's stalled here about plus 300. So like those readings with the 20-day EMA, it's pretty much neutral also. One of the few positives you can see is in the high-low analysis. You can see that the new highs have sold off, but we haven't had a new high in price, so no real divergences. And we haven't seen a pickup in new lows, which is a good sign. So if we were to get a surge above this 200 level in the New York new lows, that would be a more of a concern. Similar sort of pattern we see in the Nasdaq. Also, there's a little bit more put buying. You can see put buying was pretty strong on Thursday. The total one got up almost to 2. You can see going back for the year, that's the highest level it's been all year. Not as dramatic in the index, but it still got up to 1.43. So, it collapsed again back to normal levels on Friday at 1.19. Many of you know I like to look sometimes at a close-only chart. So this is an hourly close-only chart of the QQQ. There was some good buying there in the last hour. You can see this little, bump there. So we know that near-term resistance right around 267.45 here. So you get above that, you can easily see you get up to 273 and maybe up even to this 279, 280 area. But still, a lot of supply up here between 279 and 295. That kind of view is sort of consistent with the hourly analysis of the QID. You can see it got hit hard in the last hour. Volume picked up a little bit. So maybe you'll see a pullback into the 24.58. You get down to 24 even again. We tried to buy it there and we weren't quite aggressive enough. I think our buy level here was at 24.25 when we got to 24.42. So, I'll be watching both of those. Of course, I've been watching the Dow pretty interestingly. So here's a grid analysis of the Dow stocks, which is quite interesting. You can see that, here we have Boeing, it's all green. Caterpillar, all green. Chevron, all green except the weekly relative performance. TRV, Travelers, is, only the 4 hour is negative. Verizon, 3 out of 4. We looked at a couple of the dogs of the Dow prior to the weekend. Chevron was one we were looking at, And then AM, so it's still looking negative daily and for hourly. Weekly is positive here. So kind of looking at the flip. You can see Apple and Intel look pretty sad. So nice thing about this thing, you can kind of structure it around, and look at the worst or the best, depending on which way you want to look at it. And I'll start to include these more, and I think, so what we look for a turnaround in some of these stocks, if you start to see the 4-hour flip and the daily flip, that gets more interesting. We look at the same thing on the ETFs. You can see that, not a lot of all green. We have FXE, FXI, Gamer, GLD, and IAU, both gold stocks. Biotech, kind of took a hit. It's negative on the daily. And you go down to XHB, it's not daily. Price action is negative. IPO, pretty much negative across the board. Once again, some of the inverse QID is positive, all except the weekly. And you scroll down here, you can see that, SPY is positive on the 4-hour, negative on the daily, positive on the weekly performance. So sort of a mixed bag here. If you go down into the, let's search this by symbol, and we look in the XLL crew. You can see there's not too many XES. XBI is looking better. But XL, the industrials, of course, technology, all red. So XLRE, REITs, not looking too great. I've been watching it. And utilities is mixed. Healthcare, I do like, but it's still got short-term negative stuff here happening. We're in an XOP, it's on the cusp. It's real close to turning, as I'll talk in tomorrow's reports. Well, I hope to see you in the audience at Wealth 365. And in the coming year, I'll be doing more seminars on relative performance. There's a great compilation of articles on the front page of the Viper Report, Finding the Next Bull Market Leaders. I'd really encourage you to look at what happened during 2008 and 2009, because I'm seeing some similar things happen, different ETFs, where some start to bottom out even while the market looks negative. And of course, you want specific trading advice on either ETFs or stocks. I hope you'll join us either at the Viper ETF or the Hot Stocks Report. Have a great week. Thank you.